Hey, this is Steve Halleck of TickTocking.com. As always, you can find me at Steve Halleck on Instagram, and of course, TickTocking.com for all my inventory. I'm really sorry, it's been a while since I've recorded one of these, just been so busy, but we're gonna make up for that today. So last night, I was at the Watch Time LA show. I hope some of you guys were there. It was pretty cool. They had a lot of really great brands, a lot of my favorite brands. I posted a shot on Instagram earlier this week of all of my inventoried pieces that were from companies that were represented in this show. And it was pretty significant. I mean, Debunking, Grubel Forsey, François Paul Journe, Kari Voutilainen himself was there, Romain Gauthier himself was there. So really cool opportunity to get to see a lot of this stuff that most people don't see very often. In any case, I was there and it was sort of the opening night cocktail type of thing. And I walked up to a guy that I know. He was talking to somebody else who I didn't know. And I was just saying hi, and then we all got in conversation. I'm sure you guys have been in this sort of cocktail party situation. One guy you know, one guy you don't know. And the guy I know said something to me like, oh, the next watch I really want is a blah from one of these brands that he knows that I really like and that was there. And this other guy who didn't know who I am or what I do, he said, yeah, but you know, the big problem is resale value, you know. And this is something that I hear a lot and just wanted to unpack a little bit because from my perspective, I feel like there's a sort of general and persistent misevaluation of risk and value in the market. So I wanted to give you sort of my 2 cents on it. So we've all heard this, that indie watches don't hold their value, that you know, you just get killed when you buy them, and I just don't think it's totally true, and I thought we would look at a few kind of concrete examples. But first of all, let's start with a few sort of general like assumptions and ground rules, right? The first thing is any object basically in the world that you buy with some knowledge that you're going to lose money on it. You know, there's a cost to ownership. And of course, that's not always true. It doesn't always work out that way. We've all, or a lot of us, have bought a watch where we've made money, or a car, or you know, you lucked out and bought the right pair of, I don't know, Air Jordans at the right time, and they're worth more money or something like that. But in general, you go buy a pair of sneakers, you expect to wear the sneakers, and if you were ever to resell your worn sneakers or something like that, you'd expect they're not worth so much money. Same goes with designer furniture. The same even goes with housing, although in a little bit of a different way. And some people will argue houses always go up or something. But at the very least, in general, you're paying interest costs and property taxes and all these things. Certainly cars, motorcycles, but especially luxury goods. You know, if you go in and, you know, if your wife buys a whatever new handbag or something like that, you don't expect to just instantly be able to decide, oh, I actually didn't like that handbag and I want all my money back. So I'm not gonna try to argue that if you walk into a dealer and you buy a brand new watch, 99.999% of the time it's gonna cost you some money to own that watch. And I think we all know that and are okay with that in general. And if you're not okay with that and you're kind of structuring your watch buying and your watch collection around making money, or at least not losing any money, then really you're some form of a dealer. You're kind of somewhere on the spectrum of a dealer. You're not an actual watch buyer or collector or retail buyer or something like that. So I'm really not talking to you. This isn't like a, you know, how to be a dealer episode or something like that. So we're really talking about people who are actually buying watches, that are attempting to buy stuff that they like, and are kind of evaluating risks and maybe gun shy on certain things based on that. Now, of course, there's lots of different ways to buy. You can buy brand new watches from authorized dealers. You can buy sometimes brand new watches on the gray market if they happen to be there. You can buy pre-owned watches. And as there should be, there's different depreciation curves to any of those things. So yes, 100%. if you walk into an authorized dealer today and you buy, I don't know, most independent watches, and you pay full retail, you're going to lose a pretty significant amount of money. You know, they're going to depreciate a good bit. However, that holds through for almost anything that's in a retailer's showcase. And I think that's where people, look, let's face it also, these big brands, there's billions of dollars at stake to try to get you to buy what they're selling instead of what these little guys are selling. So I don't think it's a coincidence that people somehow have this thing in their head that they just say of like, ooh, independent brands, you lose your money, blah, blah, blah. I think that's been drilled in a little bit, and people have a vested interest to do so. But just think about what's in a retailer showcase. How are you going to do? Are you going to do any worse buying your average, let's say, Debunking, than you are buying your average Breguet, which is the flagship of, the flagship brand of the Swatch Group, or this goes on and on and on. So that's new watches. But if you look at kind of pre-owned watches, then I think it flips even further to an interesting point, right? So let's just look at some actual examples. I've sold a ton of early Journe tourbillons, resonances, and just early Journe watches. And from 2002, 3, 4, very early days until about 2 or 3 years ago, they always traded at about the same prices. You buy one, you sell it. Of course, just to interject again, of course, if you're selling through a dealer, then you're going to have to pay a price for that too. So, but I think that if you were to buy most of those watches and you sold them to a private party, you could pretty much sell them for whatever you paid, pre-owned, more or less. If you sold them to a dealer, you may lose, the customary kind of 10% or something margin that the dealer then has to make for the risk and all the work involved. So something like that. And then in the last few years, they've all skyrocketed in value to the point that I think it's probably fair to say that every single Journe that I've ever sold, the person who bought it is in the money right now. And again, that wasn't because it was the super hot, the super safe thing. It was pretty much flat forever and then ramp up, right? Conversely, I have recently bought and sold a couple really complicated Pateks that are sort of flagship products of the flagship brand in the world, and they're very hard to sell at 40-some% off of retail. There's not a lot of people looking right now for a 5270G with a silver dial, or even a platinum 5370 split-second chronograph with the black enamel dial. That's one of the nicest watches that they've made. That's not a slam dunk watch right now. And so, yeah, people will say, there's so much risk in this one area. But really, when you compare it to the general market risk or the general kind of depreciation curve of most watches, I don't think that thesis really holds up. So for another little exercise, let's go back in time. Let's imagine that we're starting to collect watches in 2002, 2003, which is when I kind of got into it. So the areas that I'm pretty familiar with. And let's say that we're only going to buy like what we think is like the super safe bet, right? The stuff that any dealer would say, I would never touch that FP Journe. That's way too risky. I would only buy these, right? And so you'd end up with a collection that probably has like a Patek Philippe 3970, a bunch of Royal Oak offshores, certainly in various limited edition configurations, maybe a couple of Hublots as well. You'd have a lot of Panerai for sure. Panerai can't miss. That's 100% safe money. Everybody wants the Panerai, super liquid. You'd move on. You'd probably grab an RM11, but you wouldn't grab it when they came out and when they were around 50 grand and nobody wanted them. You would probably grab it at around 130, 140. You'd now have a Nautilus, and you'd pay 60 grand for it, when a few years ago, everybody, you could get them for 25, but nobody wanted them because they were kind of the ugly, weird Patek Philippe. And that would basically be your watch collection. And I think that you can all see, and we can all agree, you're actually holding a lot of risk and not a particularly interesting collection. But let's go back in time, like, Avengers, and redo this little scenario here, right? So you probably, let's say you decide, I'm gonna just go with the cool stuff. I'm gonna buy what I like. I'm gonna buy independent watches, right? And I have a lot of customers who did this, and they're sitting pretty here. So you'd probably buy a Dufour Simplicity, maybe even a Duality if you got in early enough. You'd have maybe an early or some sort of Urwerk. By the way, Urwerk 103s, which are probably like one of the weirdest, people would say, oh, the most risky, this, that, and the other. They've been trading at the same price for 15, 16 years. So, maybe if you were kind of progressive, you'd pick one of those up. You'd probably have like a pretty early Kari Voutilainen, probably an Observatoire, maybe a Chronomet 27. Those have gone from 50, 60,000 to 100 plus. By the way, the Simplicity and Duality I was talking about before, the Simplicity was 40, 50, 60, depending on when you got in. Now they're 250. The Duality was, I think, 80 maybe, and now, the last one sold at auction for 950. You'd definitely have an early Journe, either a Tourbillon or a Resonance, and you would have watched those go from 20 for a Resonance or maybe 60 for a Tourbillon to maybe 80, 90, 100 to maybe 120, 130, 140, 150 or more, depending on which ones you bought. You may own a Richard Mille actually if you were in early, but you'd own an RM2 instead of an RM11, and you would have bought it for around 100 grand, and it would now be worth 200. You might have a Debunking that you picked up, something like this, and it would be worth about what you paid for it. If you bought it right, you may have a Grubel 4C, about the same thing. Again, there's lots of ways to structure this. My point isn't that you're gonna make money in one or the other, right? The people who make money are people with really great taste that buy smart and ultimately get lucky. For most of them, not a lot of people have like just a tried and true winning strategy for buying and holding and making money in watches. But the point in general is to kind of debunk this notion that independent watches are somehow inherently more risky than the bigger brand watches, because it's just not true. If you compare the level of risk in this group to nothing, then of course there's some risk there. But if you actually look at the risk in this group, I mean, you're buying Breguets, Jules Audemars APs, any Patek that's not a Nautilus, what have the big brands even made that have held value well or that are really, really sought after, right? They're very even when it comes to the market. Now, of course, this side's maybe a little bit less liquid, so there is a little bit of risk in that. But that's why I think my job is pretty important. I bring liquidity to this market and allow it so that if you did buy an Urwerk and you really want an mb&f, there's a place where you can sell it and you can buy another one, or you can trade it or something like that. And there's other people like that here. So I just think that you look at these guys today and there are dealers right now that'll pay any amount of money for like a Tiffany stamped Nautilus or something, because to them that's the smart money, right? They don't want to take any risk, so that's what they're going to buy. And the reality is all the risk is in that camp. I would much rather own a Debunking, a Grubel 4C, a Kari Voutilainen, a Roman Gautier, an FP Journe, whatever. I would rather own any of the really good watches in this group at a really good price than I would that watch that right now is the one that is the no-brainer, no-risk watch, right? So anyway, I don't like to get too deep into this stuff sometimes because I think it kind of like, I don't know, it kills a little bit of the fun of all of this, but I hear this line repeated over and over again in a way that I don't think people have fully looked at it. So I just wanted to unpack it a little bit. I have no script, I'm just sort of like ranting here, so I hope I didn't miss a good point. If I did, I'll come back to it later. In any case, buy the good stuff, worry about it later. Good watches at good prices, they do well eventually, you know? People know what the good stuff is and the cream rises to the top. That's my best buying advice to anybody, and what I sort of structure my business around. So I'm glad I could record one of these, get in and out. I'll put it on iTunes if you want to listen in the car. These ones where I don't go over like an actual watch, I usually put there so you can listen in the car or working out or whatever, and it'll also be up on YouTube for those of you watching that way that want to see my wet hair or this cool Holton Rower painting behind me. In any case, thanks a lot, guys. Bye.